and participants of the 23rd ASEAN Valuation Association Congress. My name is Zhao. I'm very happy to share with you on the Singapore market update this morning. So I will be sharing with you on the Singapore demographics, the Singapore economy overview. I will also be sharing with you on the Singapore residential, office, retail, and industrial properties overview. I will also wrap up on the economic and market outlook for Singapore. So let's start the journey now for the Singapore demographics. So Singapore population is about 5.45 million, and it comprises of the following in terms of residential population. For Singaporeans itself, is about 3.98 or 3.99 million, whereas permanent residents is 3.5 million. In terms of the population density, you can see that over the years, from 1970s to up to now, you can see over the years, the population density is increasing. That is because there are more and more people coming to Singapore. But in terms of the median age, you can see over the years, it has gone up quite a bit from, let's say, 20 over years in 1980 to 2021. The median age is about 41.8. And this can be explained whereby Singapore is having a aging population, whereby Singaporeans are not having enough children or kids to replace itself. So the population is aging over time. Household size, you can also see below that the size has gone down from 3.5 in 2010 to 3.22 in 2020. The graph below here also depicts the demographics over time, where you can see that the blue line, which is 2021, the dark blue line, over time has gone up. In particular, the age group of the 65 and over, it is increasing, and then which dovetails with the earlier point where Singapore is facing a aging population. In terms of the education in Singapore, you can see the chart below. Over the years, the literacy level in Singapore has increased, especially in the area of tertiary education, which is depicted by university. In the 1980s, the tertiary education level is probably very low. You can see that it's single digit. But up to 2020, the tertiary education literacy level has gone up to 33%. That's because other than the traditional universities which Singapore has in the past, over the last decade, Singapore has also explored bringing in partnerships with different universities across the world and setting up campuses within Singapore. And that's why in terms of education options, especially Singaporeans has a lot more as compared to the past. So if you look at the chart at the bottom, in 2010, the mean school years is about 10 years, whereas in 2020, the mean schooling years has gone up to 11.3. So long and short is that you can see in terms of education and literacy level in Singapore, it is something that is very important and highly focused. I will next talk about the Singapore economy overview. This chart here depicts the Singapore GDP contributions in terms of the various sectors. You can see that on the right-hand side, marked by light blue and dark blue, these are what we call as the goods producing industry, which is manufacture and construction. They form up to 25% of Singapore GDP. The other 70% are largely made up of services, let's say real estate, fire and insurance, information and communications, and even professional services. Why this is so is because Singapore, in terms of its economic structure, it is not that of a manufacturer economy, but rather that of a tertiary economy whereby services forms the fundamentals or the basis of its economy, or a larger portion of it. So that's why in terms of the GDP contribution to Singapore, services is actually that of 70% of the nominal value. The table here depicts the GDP of Singapore on a year-to-year basis, as well as on a quarter-to-quarter basis. So on a year-to-year basis, the Singapore economy grew 6.5% as compared to that of 15.2 for the previous year. On a quarter-to-quarter seasonal adjusted basis, the Singapore economy expanded by 0.8% in the third quarter. So you can see that there are some final aspects in terms of what the chart has showed. In terms of manufacturing, it is on a year-to-year basis for the third quarter, it has gone up by 7.5%. What are the contributions or the reasons for this increase? Growth is actually supported by output expansion in all clusters, except for chemical cluster. In particular, the electronics and precision engineering clusters continue to post very strong growth. And why this is so? This is because there is a very strong global demand for semiconductors and semiconductor equipments whereby the smart chips are required. So this is actually a very strong demand that fueled for this. Construction sector-wise, on a year-to-year basis, it has gone up by 57.9%. And why this is so is also this can be explained by the very low base with reference to the previous year, where there are a lot of lockdowns as well as uncertainty because of the COVID-19. I think this is a situation which many of my fellow presenters from the different countries have shared earlier, whereby their countries are also very much affected by COVID-19. Okay, the next thing I want to share with you is with respect to the different markets within Singapore, in particular the residential, offices, retail, and industrial markets in Singapore. So let us go into the Singapore residential market first. This is a map of Singapore. You can see that Singapore is very small. It's only about 728 square kilometers. In terms of the zoning, or what I call as the identification of the key areas within Singapore, you can see that the ones that is highlighted in orange is what Singapore deemed as the core central region. So why do we call this the core central region? Because this is where the genesis of Singapore begins, at the mouth of the river, and then where commerce activity starts, and then activities slowly branch outwards towards the rest of the country. So if you look at the screen below, towards the bottom right-hand side of your screen, that is where we deem as the core central region. The ones in gray are also areas that are highly centralized, but they are not part of what we call as the core central region. The rest of the areas in white are outside of the central region, or what we say as anywhere else in Singapore. So in terms of the residential market in Singapore, the price has increased by 1.1% in third quarter. This is also following that of the increase of 0.8% in the previous quarter. In Singapore, when we talk about housing, generally the description falls into two classes, one of which is landed, which are your terrace houses, your semi-detached, and your detached houses, or what we call as bungalows. So in short, they are properties that are seated on land itself. Then for non-landed, what commonly are known as apartments or condominiums. These are the general descriptions in terms of how properties will be labeled in Singapore. So sales volume for non-landed secondary sales market actually went up 52.7% of the, or sorry, not went up, made up 52.7% of the total transactions in third quarter, whereby it exceeds that of the primary market with 3,745 transactions. This can be explained in terms of the following reasons. Why people are constantly buying is because they see that there are rising sale price in Singapore and also construction delay. As you would recall earlier, one of my fellow presenters have also shared about supply chain disruption. This is not just happening elsewhere. This is very similar to that of Singapore, where we see supply chain disruption because countries around the world, they are closing their borders, or even the provision of construction materials to Singapore has also been stopped or disrupted. So in fact, construction cost is very high in Singapore at the moment because of the impact of COVID-19. So as a result, the building or new buildings coming on stream are very heavily affected and tested. So what happens is you see buyers trying to buy up new projects that are currently available, or if not, they may even swing towards that of the secondary market, or what we call the resale market, because demand for housing can be immediate and can be pressing. So that is why there is this situation where properties, especially current ones in Singapore, you see an increase in value. In terms of rental treatment, volume of rental transactions is healthy amid the tight inventory in the market. Most of the tenants are also beginning to take up longer lease as they evaluate their long-term accommodation. As you see, countries are now starting to gradually unwind or at different stages of opening up. But as the world starts to live and accept COVID-19, we are starting to see, countries trying to form up travel lanes, travel arrangement, or even business arrangement in some means to try to go back to commerce activities prior to the onset of COVID-19, where we try to live life normal again. So in terms of expatriates coming back is also a similar trend. So they are contributing to the rental demands as companies, especially that of tech sector, ramp up their activities in Singapore. So in terms of prices for residential, it is expected that for this year, 2021, that Singapore will rise about 7 to 9%. The next one I'll share with you is the office market in Singapore. So this trend, this table here depicts the trend for the price in offices in Central Region, as well as the rental index within that of the Central Region. You can see that price has gone down by 2.4% in third quarter itself. Rental has also decreased by 3.5% in third quarter. This is not very surprising because for the past year, Singapore, very similar to my fellow Asian countries, are also adopting a work from home arrangement. So whereby most people are staying at home and working remotely so as in the effort to curb the spread of COVID-19. Therefore, demand for office space as compared to in the past and coupled with the low levels of commerce activities, demand for this office space are in fact very low or less compared to the past. That's why you see the trend of rental and price continue to slide downwards to the south. But I think there's a silver lining to this. Office leasing activities are, although moderated, but they are higher as compared to a year ago. In the third quarter of this year, you can see that their demand for smaller units has eased as compared to the previous quarter. And more importantly, because now there are so much vacant space or spaces that are available for lease due to the less take-up as compared to the past. There's this phenomenon whereby tenants are more choosy, or what we call in the industry terms, a flight to quality, whereby they want to choose to go to office buildings with better specifications, which could mean perhaps larger floor plates so that they can house their whole department and company within the same floor, or if not, that of higher floor to building ceilings. And this, as a result, have also gave rise to a lot of pressure for older buildings, whereby they have to relook at their pricing or rentals in order to be competitive. In terms of office rent itself, we see that it should be cautiously improving 1 to 2% for the last quarter of 2021. For 2022 next year, the expectation is that rentals should pick up by 5%. The next I'll share with you is the retail market in Singapore. This chart itself is also from our planning authorities in Singapore. This pattern here is also very similar to that of the office itself, where you see a decrease in terms of the price and rental outcome. For the price itself, it is more or less plateaued, but for the rental itself, rental of retail space decreased by about 2.7% in the third quarter, and this was actually followed by 0.5 decrease in the previous quarter. COVID-19 presents very tough situation and challenges to the retail sector. There are numerous waves that happen in Singapore, different phases of state of lockdown, or in terms of Singapore, what we call as heightened alerts. So this is very challenging, and it doesn't help that because of the situation, tourists are not coming to Singapore. So in terms of demand for retail space, demand for shops, there is in fact really very tough or very little demand for them. And also F&B establishments in Singapore are also facing very difficult times, because in Singapore, we do have different phases of COVID measures, where we even go to the extent of limiting the number of people that can be dining out. Sometimes can be 2, sometimes can be 5. So a lot of the F&Bs are struggling to adapt to the challenges that market. That is probably the best performing sector within Singapore, whereby we see broad price and rental recovery across Singapore. Manufacturing activities continue to drive the recovery, as semicon manufacturers supporting electronics are very sought after. Precision engineering and electronics also record very good growth, especially that of the few quarters. You can see that even transport engineering and chemical clusters are also faring very well. So overall, industrial space in Singapore is the best performing asset at the moment, whereby there are a lot of good outcomes and for price and rental. We see healthy, sustained demands and strong global manufacturing investment interest for the year 2021, whereby price and rent should increase by about 1 to 3%. As Singapore stabilizes, we see that for the next year, 2022, this can take up to about 3 to 5%. So I will just wrap up by what is the outlook for Singapore in the year 2021, as well as what is to be ahead. So COVID-19 has stabilized. Singapore vaccination rate is also very high at about 80%. Barring a major setback, Singapore should see continued recovery supported by large outward-oriented sectors, and the progressive easing of domestic and border restrictions will also help Singapore a lot, whereby it can help in the recovery of consumer-facing sectors as well as alleviate labor shortage. However, the recovery is uneven, especially with respect to different sectors. Why do I say so? You can see that for growth prospects of the outward-oriented sectors like manufacturing and wholesale trade, they will be strong and will continue to be strong. That is because the manufacturer sector is projected to see robust growth driven by large electronics and precision engineering clusters on the back of strong global demand for semicon and semiconductor equipments. For finance and insurance, information and communication sectors, they will also be positive, whereby the finance and insurance sector will be supported in part by expected increase in domestic and foreign credit, whereas for the latter, which is information and communication, they will be boosted by healthy enterprise and consumer demand for digital solutions and services, as well as games and software activities. The aviation and tourism-related sectors, such as airports and entertainment, they will recover slowly because at the moment, different countries are still trying out different aspects of the travel lanes. Country to countries may have different concerns as to the COVID-19 situations with their respective countries. So in terms of going to life before COVID, it will be very different. But we see that countries are also working hard to make sure that they try to form some arrangement or agreement so that countries can open up to one another. So what we see is aviation will likely improve, although not at the pace as compared to the manufacturing sector. Consumer-facing sectors such as retail and F&Bs, they are very heavily affected, but they could recover as restrictions will ease over time and consumer sentiments will improve in tandem with better labor market conditions. However, these sectors, we do not foresee them returning to pre-COVID levels so quickly due to the subdued marketing outlook. And last, the construction and marine offshore engineering sectors are projected to see recovery. It's largely due to low base last year. But labor shortages, we see will continue to weigh in on the recovery of these sectors. But with broader restrictions set to be eased, we see that it will be better as compared to last year. So overall, in August, it was actually Singapore has actually done a review of its GDP projection where it was upgraded to 6 to 7%, up from previous 4 to 6. As of yesterday, the new numbers have came out, and Singapore GDP growth for 2021 will be at 7%. So with that, I also end my presentation. Thank you.